Loan to value. What do I care? Like,
Right.
just the loan. That's all I should care about, right? And then
Right.
later, after I pay off the loan, then the value, right? Because it's such a long time that you're going to be financing this home. We have these concepts that help to not only mitigate risk, but they also tell the buyer, the borrower, how much equity is built up in the home at a certain point in time. But then, in layman's terms, the loan to
Yes.
value is going to be, here's the loan you have after your down payment. So that, remember, it's after
Right.
your down payment. Here's how much I'm borrowing for the loan to get this house, to live in this house. And then the value of the home is what the appraisers do, right? They're going to determine the value of the home, and then we're comparing them, the loan, how much you owe on the loan, to the value of the home. And the difference of those two numbers, that's the equity. In other words, the value that you have already paid off in the home, the equity in the home. That's what that's called.
Amount loan divided
Mhm.
by the appraisal, then you multiply by 100 and you get a percentage. So
That's right.
let's say you get a percentage of 80%. The 20% is how much equity you have in the home, and then
When we
the
subtract it.
80% is what you owe.
And that's how the lenders are looking at the risk. If you got an 80% on your loan, they will look at that more favorably than
Yes.
if you have anything above that, like 95
Yes.
or 90.
Yes.
That will dictate interest rates sometimes.
Yes.
That can also dictate how risky they're going to view that particular borrower.
Right. And on a
That's part of it.
conventional loan, if it's at 80%, that means that you don't have to have mortgage insurance.